You are tuned to ARP on the Accelerated Radio Network. It's 12 noon, and it's time to have lunch. Lunch with the Finance Bunch. Lunch with the Finance Bunch. Lunch with the Finance Bunch. Bringing money talk you can understand. And now here's your host, Miss Charline.
Good afternoon, everyone. This is Miss Charline, and welcome to Lunch with the Finance Bunch. Today we have in our studio, and I'm so happy to have him back, Mr. Erik Kaplan. How are you, Mr. Erik Kaplan?
Hi, Charline. How are you?
I'm good. How are you?
I'm very well, thank you.
That's good. Now, Erik is our credit expert that we have on, and we refer to him for any credit questions that we have. And some of our listeners have actually reached out and worked with you.
Indeed,
and
yeah,
so
a few of them actually.
Exactly.
Yes.
And so they're all happy with their results. I want to thank you for taking such good care of everyone, because we know credit is an issue that people hate to discuss, and it's a scary thing. And so I was just hoping today we could delve into it a little bit and answer some questions that some of our listeners had.
Definitely.
Great. So today we're going to talk about the building blocks of strong credit. And, some people, we may not have bad credit, but we want to build that credit score so we have the best advantage when we go to purchase things, when we're trying to get a new job, because that's what leads first these days. They ask us for our, credit. They ask us for our Social Security number, and then they run our credit, and then they make judgments based on that. So we want to put everyone in the best light that we possibly can.
Definitely.
Yeah. So first, tell me a little bit about yourself so we can kind of recap, and those who haven't been introduced to you can know a little bit about you.
Sure. So I started out in the mortgage business. I was a loan officer for about 12 years, and then I started doing credit repair for my own client base, and it turned into a business. So, we've been doing it 9 years now. We process probably about 100 credit repairs a month.
Wow.
We do credit repair and debt settlement. And, so basically we have an office in New York, an office in Los Angeles, and we just help people with the credit.
That's great. Now, one of the questions that came up was, I don't have bad credit. I just want to figure out how to pay my credit cards off. So when you have a question come up like that, I've had that come up several times this week because people who are going to your credit seminar want to know, why do I need to attend if I don't have bad credit but just have a lot of debt to pay off? What does that say?
So typically when you have credit cards,
Mm-hmm.
you want to keep your credit cards at 50% of the credit limit. So if if you have a credit limit of $1,000,
yes,
you want to try to keep it below $500.
Okay.
A lot of the times, if you don't have a lot of credit cards, if you have 2 or 3 credit cards and your credit cards are maxed out or close to being maxed out,
mm-hmm,
it lowers your credit score.
Ah.
So if you go to apply for something,
right,
it actually looks like your credit is lower because your balances are high. I suggest that if you pay down your credit cards to at least 50%, and you wait 30 days, because usually you have to wait till the credit cards cycle and
right,
report to your credit bureau. So if you wait the 30 days and you pay those down, it'll increase your scores quite dramatically if you only have 3 credit cards.
Okay, I
right.
see.
So if you have a car loan, for example, it's an installment loan.
Right.
So an installment loan, it helps your credit, but it's not like a revolving credit card. So you can't really, if you have a car, you can't put more money on your car. You're just
right,
making a monthly payment.
That's right.
Right. So it affects your credit, but credit cards really affect your scores.
Oh, so credit cards can be more detrimental than a car payment. Like if your car payment is $500 or $700, that's not going to have a negative effect on your credit as long as you're paying it on time.
Correct.
But if you have a credit card and you max that credit card out, then that can have a negative impact on your credit.
It will have a negative impact.
Okay.
It'll actually lower your credit scores the higher the
debt is.
Yes.
Oh, wow. So I hope everyone understood that you have a credit card and we're going to use $1,000 as your benchmark. And if you 50% or less of that is what's acceptable so that it doesn't have a negative impact on your credit.
And if you're also going to apply for another credit card and you have a credit card that's maxed out, a lot of the banks won't approve you because it looks like you can't manage your credit.
The credit that
which
you
have. You might have just had a purchase
right,
that you bought something and you're going to pay it off.
Right.
But before you go apply, it's always good to pay it down, and then wait 30 days and then apply.
Okay. So really building your credit and maintaining it, there's a strategy involved.
Definitely strategy.
And you have to have a plan.
Yes.
Right? Because some people go into it not knowing much about, your credit, your FICO score and all that.
Well, I think one of the big misconceptions is that if you pay your credit card, people think that if I paid it on the second, on the fourth, when they get the check and cash it, it's going to automatically report to your credit bureau. which it doesn't.
Right.
So if you use your card, it's going to report very quickly. But if you pay it, you have to wait for actually the credit card companies to cycle before you actually get the benefit of showing on your credit report.
Right, and that takes approximately 30 days.
Well, it takes whenever the credit card cycles. So, if you have a Capital One, for example, and they cycle on the 24th, so the 25th, you'll be able to, see that reflection on your credit report.
Wow, that's really good to know, because that was one of our big questions. Another question that people had was, how do you start acquiring credit? They don't have bad credit or good credit, and they want to get a credit card so they can get started, or should they get a credit card to get started? What's the best way to start?
There's a couple ways. If you have no credit whatsoever and you go to apply for credit, you might have a hard time getting it. So
Right.
if you, let's say you're a Wells Fargo customer, you can go to Wells Fargo and you can get a secured card. So you give them, $500, and you can use that. You give them money and use your own money.
Okay.
It's a good way to start if you can't get credit.
Right.
But there are credit card companies out there, for example, HSBC, Capital One, Credit One Bank. These will give you a credit card if you don't have credit.
Okay.
Because they have cards for rebuilding, and you can actually go online and you can see if you get pre-approved.
Oh,
So it's a
okay.
good way to start. And then let's say you have a spouse who has a credit card, they can always add you as an authorized user to the card, so you can have the benefit of the card.
Okay, and then I want to talk about that too, because there's this thought, and I want you to clarify this for us. If a person has great credit and they have a credit card that has, never missed a payment, and then they add someone to that card, does that help build the person that they've added to the card? Does that help build their credit history?
Yes.
It does.
Yeah. So if I have a card, and let's say there's $1,000 limit on it,
Yes.
and I add you as an authorized user, you have the benefit of the credit history and the time, how long as I've had it for, and so you get the history of it, and it shows on your credit report.
Wow.
But if I miss a payment, obviously it's going to negatively affect you as well. So
okay.
you got to prepare who you're going to add as an authorized user.
Exactly. And then with the authorized user, the bill goes to the credit primary holder's
Yes.
address, so they're in control.
Correct.
Okay, so there you have it. So if you're going to get to be authorized on someone's credit card, it's your job and responsibility to make sure that that credit card payment is made, because they get the bill, so you may not know if the payment that they're making has been paid.
Correct. And one thing you want to make sure is it's good to have 2 years history.
Right.
So you want to make sure that person's had that credit card for at least 2 years.
Okay.
Because it's just, you want it to be seasoned.
Okay. So it takes 2 years to season.
It doesn't take 2 years, but it's just a good benchmark to have someone have a credit card for at least 2 years.
Oh, okay.
Yeah.
These are good points. I always enjoy talking to you. And then another question we had was from couples, and this is regarding good credit and bad credit. So when two people get married, and then their credit starts to merge.
Well, let's start there.
Okay.
If you have two people that get married, they bring their separate credit to the table.
Right.
If they apply for a mortgage together, if they apply for a credit card or a car, that's the only time it's going to be jointly put
merged.
together.
Okay.
But if they keep it separate, it will always be separate.
Okay.
It's just when they start applying for accounts together.
Okay. So now, once they apply for accounts together, will it forever be merged?
Yeah, because you're basically a signer on that account.
Okay.
So it will always be, unless, until you either close the account or pay off the car or the mortgage, whatever it may be, you will be joint linked to that account with your spouse.
Okay. So I think the message here is be careful. Make sure that any credit that you become a part of, that that you are a part of that account. So if the person doesn't pay, it's going to negatively affect you. But the good part of it is that if they do pay their credit card on time and you pay your portion of that credit card on time, it will have a positive impact on your credit.
Correct.
That's great. That's great to know. Now, we have a lot of young people who have acquired credit card debt, and they don't know how it's affecting them. They don't know how to get out of it. What would be your suggestion as a way to start minimizing some of the debt they have?
So I don't handle debt consolidation.
Right.
I do debt settlement. But there are companies out there that do debt consolidation. I would suggest, let's say you have a Citibank card, I would suggest going to Citibank
Yes.
and asking them if they have a third party or they work with somebody who does debt consolidation. Because there are companies out there, and there are probably very good companies out there, but I refer people back to the credit card companies because they're affiliated with them, so they may be able to help them out.
Now, in contacting your credit card company, sometimes will that credit card company help you by lowering the interest rate or working out something with you? Is that something?
Yeah, I mean, I think if you close the account, if you don't keep it open, they will do some sort of interest rate reduction and do something over a period of time. So let's say you owe $5,000. They may say, well, drop that to 0%. You pay a certain amount per month for 5 years until it's paid off.
Oh, I see.
So you won't have access to the
credit card anymore. And that's brings up another question. What type of impact does closing account have on your FICO score?
So it really depends on how many credit cards you have.
Okay.
How many accounts do you have? If you have one credit card and you close it, it's gonna substantially negatively affect your credit report.
Okay.
If you have 5 or 6 credit cards, you close one, it will drop your scores a little bit to begin with, but then it'll increase over time because you have other cards that are helping the positive credit.
Okay.
But it really comes down to, do you have one card or do you have 5 cards?
Wow. I'm telling you, this is a great show to be listening to. So I want you to give your contact information because like before, so many people got so much of a blessing from you being here. So I want them to be able to contact you. So what's your contact information?
Excuse me. My phone number is 800-822-7120 and my email address is kaperik@gmail.com.
Wonderful. And so anyone who's listening, I want to definitely encourage you to at least have a conversation with Erik or someone on his staff to talk about where you are with your credit and see if he can help you if you're in a situation where you have things on negatively affecting your credit, and you want to get those things removed or you want to find out how you can pay them off. Who you contact, those types of things.
And we offer a free consultation, so it doesn't cost anything to send us your credit report and let us review it.
Wow, that's even better. So a free consultation, you guys. I always try to get people on who do free. So the consultation will be free. At that point, he'll be able to look at your credit, let you know how he can help you, and you guys can move forward from there to reestablish or establish the credit that you may have had challenges with in the past. And in past years, a lot of Americans had challenges with their credit. Credit card companies were literally closing lines of credit or limiting them or lowering them, which was, messing up everyone's FICO score too. I heard nightmare stories of someone having a $10,000 limit and they had $4,000 that they had actively using, and the credit card company lowered the amount of available credit they had to $6,000. So that's, a significant difference, which lowered their FICO score.
They're still doing it
and
now
they're still,
well.
Oh, wow.
Yeah, it's still going on.
Yeah, so you have to be careful when you have a credit card. Make sure you know what the limit is. Make sure you never go above 50% of that limit. Try to keep it as much below that as possible so that you have room to, negotiate in case something like that happens. What would cause a credit card company to do that? Do you know?
Well, they look. I mean, I'm only guessing because I don't know exactly, but it's an educated guess. I would say that if you have too much debt and they see you have too much debt, sometimes they're worried that
you won't be able to.
You won't be able to. Maybe you have a missed payment on a car, or missed payment on a credit card that you just happen to miss, because it does happen sometimes.
Mm-hmm.
If that does happen, they think the ship is going down, and they're going to start lowering every time you make a payment. They're going to lower down your balance or your credit limit because they're afraid that something bad is happening and that they want to stop that.
Wow. Yeah. So we need to be educated. Credit isn't something that you should enter into without a plan and know why you're opening credit. Not just open it because you were offered a credit card when you walked into a department store. And I want to talk about department store credit too, because that's kind of a pet peeve of mine. And so, a lot of people get into credit card debt because they'll have every, high-end retail store credit card. And, not to mention any credit cards in particular, just as a general overview. But, when you have these high-end retail credit cards, a lot of times they're attached to high interest costs, very high interest. So what would your suggestion be to people who have those types of cards versus a Visa or a MasterCard or something like that?
Well, right now,